You're a high rate taxpayer. If you put your properties into a company, you will end up saving a lot of tax because corporate taxes are lower. People trying to claim everything from going to McDonald's to fancy restaurants. Benefit to the buyer is they don't have to pay the higher stamp duty of 3% because they're effectively buying the company.
Welcome to the Social Landlord podcast, where smart investing meets peace of mind. Today, we're with Ishtiaq from Abacus Tax Advisors, who's going to tell us the secrets where you can save tax and most probably the best strategies you could use. Ishtiaq, thank you very much for coming on.
My pleasure.
So tell us what your thoughts are on tax and what people do. And most importantly, what people wanted to know is how you decided to get where you are with Abacus today.
Okay, so I started off over 20 years ago. I've always had a keen interest in properties, property tax, property strategy. And I've always been keen at looking at ways of saving tax, different structures, and also each person is an individual. So different strategies suit different people. So this is one thing an accountant needs to understand, that not everybody's circumstances are the same in relation to what they want. So that's important.
But why property?
Myself, I've been into property and I have a property portfolio, so it's a keen interest of mine and I know I've been successful. So it's nice to share the knowledge that you have with clients who are with you for many, many years and will be with you for many, many years to see them being successful as well.
And you say you started over 20 years ago. What is your background prior to accounting?
I did a degree at university, went on to do my chartered exams. I also am a qualified mortgage broker, so when it comes to clients wanting to get a mortgage, when you're a chartered accountant as well as a qualified mortgage broker, you know how to prepare the paperwork in such a way that it's more credible to a lender. Simple as that.
Right, okay.
And I run a practice since 2003. About 12 of us all together in the office. And different individuals specialise in different areas.
What made you start your own? Given at that time, I'm assuming tax wasn't a big issue then, going back 20 odd years as it is now, in terms of saving structures in the industry that we're in now. People don't understand how important it is until they have certain amount of properties or
Correct.
Until they have a larger portfolio.
That's a good question. I think when you're an accountant, you get to see the financial status of each individual. And I noticed very early into it that, look, property is a very lucrative area to be in. And returns grow exponentially in years to come. So it was something I saw with clients doing well. And I went into it myself and then specialised into property tax, looking at how to save clients tax, and also guide them, be a bit of a mentor because I'm also into it. So I can guide people. Do you want to set up an LLP, a company, treat it as an individual property investor, and so on?
You mentioned there companies.
Mm-hmm.
It's a question we get asked nearly for 70% when we send out properties to our investors, especially if they're a new investor.
Uh-huh.
Do I buy in a company name? Do I buy in a personal name? And the question we get asked after that is, what's my advantage?
Okay, so I could probably spend 2 hours talking about this, literally. Each circumstance is different. There's many benefits of holding your property portfolio in a company. It allows you a lot more flexibility in terms of claiming expenses. At the moment, you can claim, for example, all the loan interest when you hold a property in a company and you have a mortgage, which differs to holding a property on your personal name. There's a lot more expenses you can claim through a company. Perhaps you can put a company car through as well, which allows you, this is a separate tangent. You could sell your own vehicle. Let's say you sell it for £20,000, put that into a company, buy a property and lease an electric vehicle, and the payments that you make for the lease would actually come off the profits for corporation tax. So you save tax at the same time. At the same time, you're not holding a depreciating asset Instead, you're holding a property which will only appreciate in value. At the same time, you're receiving rental income. So sometimes it's just smart ways of doing the same thing that you're doing, but being able to take a tax advantage when it comes to rejigging assets that you've got, I'd say.
And Fayaz mentioned that a lot of people don't really understand the implications or the benefits of being smart about your tax until they've got 4 or 5 properties.
Correct, yeah, correct.
What
And
would you advise?
I often see this where people have got a portfolio of properties on their personal names. They're higher rate taxpayers anyway, so they're paying pretty much almost half of the income into income tax. Now, in that scenario, just to explain, if you're a high rate taxpayer, if you put your properties into a company, you will end up saving a lot of tax because corporate taxes are lower than personal tax. There is ways of transferring a portfolio of properties from a private holding. For example, you might have 6 or 7 properties on your personal name. You've held them for years. People are often scared of transferring them into a company because it will attract stamp duty and capital gains tax. But there is ways around transferring all the properties in one go into a limited company, not paying any stamp duty or capital gains tax. And that's something we can help with.
Right.
You mentioned expenses. I think a lot of us, including myself and Lewis, the conversation we're having outside of this, how much is it you can claim back as an expense, or are you limited to what you can?
Yeah, so anything that you can. So the difference between holding properties in a limited company and on your personal name is effectively treated as an investment. In a company, technically, it's a trading business to some extent. So if you have to buy a laptop, computer, desk, chair, and you can substantiate it for the business, you can claim the whole amount as an expense. Until last year, you were getting 130% capital allowances on any assets that you spent. So if you spent £100 on a new iPad, you would get £130 effectively as an expense in your company accounts. So there's further benefits as well.
No, I mean, in terms of expenses, when we were just talking in general, like any receipt or anything can be put towards an expense.
Anything that we can substantiate that has been used wholly and exclusively for the purpose of that company, mileage, travelling, subsistence, we can carry on stationery, anything that we can justify that's been spent in relation to the active trading activities of the company.
I'm going to ask you a question. I'm going to make it very vague because I don't want to make it too obvious. There's a client of ours about a year ago. We introduced that client to yourself to help on tax. They've got their own local businesses due to ill health. They've got a large portfolio. You save them a huge amount on tax. Do you recall who I'm speaking about? You met them in our event in Leeds as well.
Yes.
Yes. Yeah. So that client of ours, do you just want to explain how much you saved her and what, in a rough idea of how you saved her the money?
So again, it goes down to incorporation relief. Previously, holding properties on your personal name, you're paying almost 50% of the income into income tax. At the same time, you are not able to claim the loan interest to a full extent on the mortgages that they had. Once everything was transferred into the limited company, which took a little bit of time, the corporation tax last year was 19%. So instead of paying 50%, they were paying 19%. At the same time, they ended up being employees of their company, which further reduced the rental income, the net rental income that was assessed for profits for corporation tax. So they saved hugely just by restructuring their setup.
These landlords with mortgages, how much can they claim back in terms of repayments and interest?
So if the property is in a limited company, you can claim 100% of the interest that you pay on the finance.
Okay.
If you have properties on your personal name and you have a mortgage, over the last 4 years, the amount you can claim back as an expense in interest has been tapered and is almost negligible at this moment in time.
Okay.
So in fact, if you're a higher rate taxpayer and you have properties on your personal name, and you have a mortgage, you probably won't see much rental income after taking into consideration the amount of tax that you need to pay.
Again, it goes back down to structure.
It goes back down to structure. Yeah, it's worth sitting down, having a look at. And again, you seem quite keen on companies. It might not work for everybody. You know, everybody. You need to understand each person's situation, their plans for the next 4 or 5 years. Do they have children? Do they want to split shareholdings? Do they want to reduce their estate possibly over the next 4 or 5 years? They can transfer shares to their children over time, and that way keep their own estate below the threshold for inheritance tax. So these are things that need to be fine-tuned to each individual that comes into you. It's very easy when a client comes at the end of the year to an accountant just to process the books, but that's not really adding value. You want to be guiding somebody all the way through, pushing them towards new ideas, new expenses you can claim. At the moment, for example, I touched basically on electric cars. You know, if you have a £50,000 car sat in your driveway, it's depreciating every year. Why not sell that, put the money into a company and go and buy 2 properties? With those 2 properties, you will probably get 75% loan to value. You'll get £800 or £900 in rent if you buy something in Leeds, for example, at the moment for say circa £100,000. That's £1,800 a month. Take a few £100 out for the mortgage payments, and you can lease a brand new Range Rover, an electric one, for example.
You can't insure them nowadays.
You can't insure them. That's another matter. That's another matter.
Is there? So I know there definitely was when we first did my accounts a few years back. Any common misconceptions? Maybe perhaps things that people think they can claim against,
Yeah,
or
I think
people
often
that
you
don't realise they can claim
often you
against.
see people pushing their limits when it comes to things they can claim. You'll see people trying to claim everything from going to McDonald's to fancy restaurants, and this is where you need to tell clients, look, there's a limit to what you can claim, and it needs to be substantiable and quantifiable.
A question I got asked by a client of mine. They're from Turkey, so they're not from the UK.
Mm-hmm.
They're happy to buy investment deals from us because most of our deals with our social housing leases, our generally we source below market value.
Yes, yeah.
And they're hitting 8-9% rental net yield upwards.
I've seen a few of
You've
those.
seen a few of
I've
these
seen
as
a few
well.
of them. Yeah.
So for average investor, there's no reason why they shouldn't invest with us because we've got good background behind us. We've got a good team.
Correct. Yep.
The only thing that scares these investors from abroad, because they're happy to buy in London, but the problem in London is you pay extortionate price and you get 4-5%.
And the returns are not there.
Exactly.
Yeah.
If it's for cash flow, it doesn't make sense. They're happy to buy it from us, but the only thing that scares them, which I waited for this podcast to ask you as well, is what's the best strategy for them to buy here? Are you opening a company in the UK to help with your tax, and what is the whole procedure?
Yeah, possibly. You could, again, each scenario is different. We need to understand the circumstances of each individual, understand what they want, and then we can make a justified judgment into which way to go forward. There's no issues in relation to foreign nationals holding a UK company. So
how would it work for them in terms of moving funds across? Is there any problems from their side? Or?
Some countries have some issues in relation to transferring funds, but the majority, I don't think we have any issue with.
Do they need to be, if they open a company in the UK, do they need to be a director, or does it have to be a UK citizen to be a director?
No, they can be a director as well. And again, they don't have to be a director. They could just have a shareholding of the company. Shareholding is somebody who actually owns the company. The director directs the company effectively. But yeah, there's no issues in foreign investors investing in the UK, and you'll see many of that in London over the last 15, 20 years. A lot of overseas companies and individuals investing heavily into London and Manchester. I'll go just touching back to your question about benefits of companies. Sometimes it's beneficial buying a if you think you're selling a property, for example, you could buy a property within a limited company and then sell the limited company that holds the property. The benefit to the buyer is they don't have to pay the higher stamp duty of 3% because they're effectively buying the company. So a lot of properties in London are not sold individually. You'll see lots of properties being sold which are held within a company. that way, to some extent, you can charge a higher price. If the property is £1 million, stamp duty might be £30,000-40,000. So the buyer doesn't need to pay the £30,000-40,000 because he's buying the company and not the property. And effectively, you can charge a higher amount. So it depends on even the seller's strategy as to what they want to do in order to maximise what they want to get back.
It's a good point. That a lot of people wouldn't consider it.
You wouldn't consider it.
You
Yeah,
wouldn't
again,
think
there's
of it, never thought of it.
yeah. So you sell the company that holds the property.
But it would only work in the returns, obviously.
Of course, and most of the properties that I've seen that you sort of forward across on your mailing list, generally the rates are fantastic. So you know,
I think
again, it might be worth speaking to.
For us, our key, whenever we send a property out, it's always a question like, we're sourcing this property. We've got, for example, one that we're selling at the moment. The market value is about 75,000 for a 2-bed house. We've secured it for 60,000. So you're buying below market value, even with your refurbishment cost and our legal fees, stamp duty. It's still below market value on your total investment. Yeah. But we're very careful in terms of finding that balance of finding it below market value and also offering higher rent. Which is where our social housing comes in.
Yes, which is a fantastic idea.
Certain contracts that we have, certain relationships that we have with certain providers where the local market can't match the rates that we're getting.
Correct.
But you're not buying a property just because of the higher rent. You're buying it because you've got some equity left in there, and plus you're getting higher rent.
Of course, yeah. And it makes it more feasible to buy.
Exactly.
And also, from my understanding, you do all the maintenance and all the headache that a landlord wouldn't normally need to do. That makes it more feasible for you, possibly even overseas people or people that are not living in the locality of the property that you are offering, because you provide that service. So
it's got to get to a point where people put a value on the time as well, and the time
of course,
that they've got to put into the properties.
That's where you come in, though, because we've known you for many years. Know your business pretty well to understand there's a lot of local and out-of-bounds investors and businessmen that you look after their accounts for them. I'd say probably 60 to 90% of the West Yorkshire main hire businesses, you do their accounts for them. A lot of them are property landlords.
Yes.
How do you, and multiple businesses as well as multiple properties, how do you help them structure when you've got a company that's got loads of different franchises under different names? And
again, it just goes back to each circumstance is different. You know, whenever somebody comes to me, the first thing we do is we sit down and understand what the individual wants for the next 5 years, rather than just taking up the details and touching base in 12 months' time to prepare the accounts. We need to, at the end of the day, if a client comes to me at this moment in time, he's not doing well, if I can push him or mentor him or guide him, in 5 years' time, if he has 20 properties, well, I'm going to be charging him 20 times the amount that I possibly would have in the beginning. So it's in my interest to help clients and individuals to do well. It's more beneficial for us as an accountancy practice to have successful clients and happy clients.
Understood. Anything that you would change that you've done in the past 10, 15 years in practice?
In practice or the property side?
Both. What's been your main learning curve on the property, mainly on the property?
Property side, I think you need to be prepared to take risks. Sometimes don't let those doubts stop you from moving forward and investing. Many opportunities will have come to you, and you've thought, and 4 years later you look back and you think, I wish I'd done this, or I wish I'd done that. Sometimes you just have to make things work. You have to just jump into the pool and swim yourself out, and you will get to the other side. Once you have made a decision again, make sure it's an informed decision and go ahead with it, rather than thinking and being indecisive. Make a decision, go ahead with it, and 3-4 years later you'll probably see that you made the right decision in general. Of course, look at your own risk and what you're capable of, but sometimes when you take on a commitment, you will actually work that much harder to fulfill that commitment, and it actually makes you get out of bed on a Saturday or a Sunday if you have to, but the rest of your life will be much easier.
And something that we ask everyone that comes on, being 25 now, if you could go back to your 25-year-old self and give yourself one piece of advice to save yourself some pain in
Yeah.
any aspect, business, property,
Yeah.
just your life as a whole?
I think one thing I would do, and I see a lot of this because obviously we go through bank statements of clients and we see where people spend money, etc., is, just curtail your expenses, try to save as much as you can, and just start investing, whether it be property or other things. But it's too easy to spend £100 on a meal instead of £15 on a meal.
I think for you guys, when we always say in property, people pose an image that they don't really have. They can actually see the evidence of it. Like,
Exactly,
you've
yeah.
got expensive clothes, expensive car, but you're literally struggling to
Exactly.
maybe have £2,000 a month in your bank
Exactly.
account.
Sometimes you'll see the people with all the fancy cars and so on having
Living for
very
the
little in their
weekend.
bank account. Yeah.
Living for the weekend, going
Yeah.
out and spending.
So I
half a
think what I
salary
do
on it.
is, as a young person, is save and just invest. And once you've got that little business or property started off, it's like a snowball. It's very easy to then carry on buying and getting to a level where you think you're quite satisfied. Everybody has different sort of ultimate goals. Some people want to stop at 3 properties, some want to stop at 4 properties. Again, sometimes I see clients with maybe 100 properties, and sometimes in the back of my mind, I think, are they successful or are they not successful?
And are they the ones
sometimes
that are
having
more
too
hard
much.
to work with?
Yeah, sometimes having too much brings its own headaches. So, each individual needs to decide, look, this is the kind of disposable income that I want in 5 years, and work with that plan. Your scenario and your wants may be very different to other people. You might not want to have, I don't know, a huge 8-bedroom detached house. You might just want a 3-bedroom detached. So your wants might be different to somebody else's. So understand what you actually want in life over the next 5 years or 10 years, rather than just looking at the next person and thinking that's what I want.
So you just said that, just to touch up on that, you sometimes meet people with hundreds of properties,
Yeah,
and
yeah.
you're in there, despite having, tenfold what someone else may have, you're
Yeah.
still questioning whether they're actually successful or not.
Yeah.
When you get to a size of that, say
Uh-huh.
you've reached 100
Uh-huh.
family houses
Yeah.
around Yorkshire,
Yeah.
would you advise moving to a different sector to invest in? Would you advise in condensing them properties to higher end properties?
Yeah.
What would you advise doing from there?
Again, it depends.
Like you say,
I would
if
say,
you're looking for longevity, if
Yeah.
you're looking to build generational wealth,
yeah,
rather than, because like you say, each situation's different.
Different,
No
yeah.
one's in it for a quick
Yeah.
buck, really.
It depends on what that individual wants, whether he wants to distribute it to his family, whether he wants to, like you're saying, pass it down generations. You need to think about inheritance tax as well. These are all areas that are important to consider before advising any client in relation to strategy that they want to adopt. I'd say more important is the individual client's sort of plans you need to work with.
Yeah.
Simple as that.
Ishtiaq, many thanks for coming on.
My pleasure.
It's been very informative. I think a lot of questions that we get asked have been answered.
Oh, brilliant. That's
So
good.
thank you
That's
very
good.
much.
No, pleasure. Thank you for inviting me.
You're welcome.
Thank you.
Guys, thank you very much
you very
for
much.
watching.
Thank you.
Feel free to like, subscribe, and follow wherever you're watching. Thank you very much.